Welcome back to StockBeam, your daily spotlight on the U.S. stock market. Today is April 10th, 2026, and we have a really interesting stock on the radar. We're talking about Avis Budget Group Incorporated. This stock is surging strongly, up 13.7% today, and there are some very compelling reasons why it's catching serious attention right now. So grab a coffee, pull up the chart, and let's break this one down from top to bottom. Before we get into the numbers, let's make sure everyone understands what this company actually does, because context matters. Avis Budget Group Incorporated is a company operating in the industrial sector, specifically within the rental and leasing services industry. Avis Budget Group Incorporated, together with its subsidiaries, provides car and truck rentals, car sharing, and ancillary products and services to businesses and consumers in the Americas, Europe, the Middle East and Africa, Asia, and Australasia. The company operates the Avis brand, which offers vehicle rental and other mobility solutions to the commercial and leisure segments of the travel industry, and the Zipcar brand, a car-sharing network that offers vehicle rental and other mobility solutions. In terms of size, the company currently has a market capitalization of approximately $10.5 billion. That puts it firmly in large-cap territory, a segment of the market that institutional investors typically monitor closely. The company doesn't yet have a traditional PE ratio, which is common for high-growth or pre-profit companies. Alright, let's get to the key question: why is CR surging strongly, up 13.7% today? Here's what's driving the move. Headline number 1, Hertz Global, HTZ, climbs 10% on travel demand pickup hopes. Hertz Global Holdings Incorporated, Nasdaq HTZ, is one of the 10 stocks with easy 9 to 30% upside. Hertz extended its winning streak to a fourth consecutive day on Thursday, surging 10.05% to close at $6. Headline number 2, stocks making big moves yesterday: CrowdStrike, Avis Budget Group, Apple, Broadcom, and Tesla. Check out the companies making headlines yesterday. Headline number 3, short sellers squeezed hard as Avis shares rocket 150%. Bloomberg, a highly shorted stock. A shrinking pool of shares available to trade. A price that keeps climbing. They're the classic signs of a painful short squeeze, and they've rapidly come into V. Headline number 4, Avis Budget, SAR, rockets to 4-year high. Here's why. Avis Budget Group Incorporated, Nasdaq SAR, is one of the 10 stocks with effortless gains. Avis Budget soared to a nearly 4-year high on Tuesday amid increased short interest for its stock, while investors. Headline number 5, why is Avis Budget Group, SAR, stock soaring today? Shares of car rental services provider Avis, Nasdaq SAR, jumped 17.3% in the afternoon session after a major industry report showed that used car prices hit their highest levels in years. When you see a move of this magnitude combined with the news flow, it tells you the market is repricing this stock based on new information. Let's now take a closer look at the price action, the technical picture, and what the fundamentals tell us. Let's dig into the numbers now. CR is currently trading at $297.08, surging strongly, up 13.7% from yesterday's close of $261.35. Now let's talk about the 52-week range, because this is critical context. Over the past year, this stock has traded as high as $297.98 and as low as $66.69. That's a range of $231.29, showing you just how volatile this name can be. Right now, at $297.08, the stock is sitting 0.3% below its 52-week high, and 345.5% above its 52-week low. Over the past 5 sessions, the stock has trended higher. Here are the closing prices: $190.42, $212.60, $255.15, $261.35, $297.08. That gives you a quick snapshot of the recent momentum. Now let's talk volume, and this is where it gets really interesting. Today's trading volume came in at 4.5 million shares. To put that in context, the 20-day average daily volume is 2.0 million shares. That means today's volume is 2.3 times the average daily volume, a significant spike showing elevated market interest. Here's why volume matters so much. Price moves on high volume are far more meaningful than moves on thin volume. High volume tells you that institutions, hedge funds, and serious traders are actively participating, not just retail noise. Now let's look at the chart from a technical standpoint. The 5-day moving average at $243.32 has crossed above the 20-day moving average at $150.32, a pattern that technical analysts refer to as a short-term golden cross. The stock is currently trading above its 50-day moving average at $124.32, which is a level that intermediate-term trend watchers often use as a reference point. On the longer time frame, price is above the 200-day moving average at $144.63, a level that long-term trend analysts commonly use as a benchmark. The RSI, or Relative Strength Index, is currently reading 94.0. That puts the stock in heavily overbought territory, a historically stretched reading that traders often note. Here are the key technical reference levels that chart analysts commonly watch. On the support side, the first level to note is $150.32, which is the 20-day moving average. Below that, the 52-week low at $66.69 is another widely referenced level. These are areas that technical analysts historically identify as potential support zones. On the resistance side, the 50-day moving average at $124.32 is a widely watched intermediate reference. Above that, the 52-week high at $297.98 marks the furthest extent of the past year's range, a level closely monitored by chart watchers as a key reference point. Let's wrap up with what the professionals are saying and what the fundamentals look like. Wall Street currently has a consensus rating of hold on this stock. The average price target from 7 analysts sits at $106.43. The most bullish target on the street is $128, while the most conservative sits at $85. That gives you a sense of how divided opinion is among professionals. Revenue is actually declining at 1.7% year over year, worth watching carefully. The company is currently operating at a loss, with negative margins of 7.6%. This is a data point that analysts typically note when evaluating profitability. Now let's examine the risk factors associated with this stock, because every move in the market has two sides to consider. CR carries a beta of 1.93, so it tends to be more volatile than the average stock. That is worth factoring into any broader portfolio analysis. As always, nothing in this video constitutes financial advice. This content is for